a lot of good deal flow. And I'll tell you the one other tip that I learned, and I think this has even helped more, is I would say last year I had like 8 or 9 different markets I wanted to be in. I wanted to be in Texas and Florida and Georgia and North Carolina, South Carolina. I found them all to be very good markets. Nashville, Tennessee, I found it to be great markets. The only problem is trying to do your market research in all those areas, but even notifying all the brokers. They're just, once you tell them this is exactly where I want to be, and this is kind of where we're at, we're more of a laser focus, like, hey, I only buy in Oklahoma City and Tulsa. Now I have brokers that are like, wow, I need to get them those deals because I know exactly what they need. So to tell you the truth, my deal flow just by limiting my markets has actually probably increased almost double.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Manny Perez of BlueSpruce Holdings. Manny is an entrepreneur, real estate broker, real estate investor, syndicator, and the co-founder of BlueSpruce Holdings in Denver, Colorado. How you doing, Manny? And thank you for coming on to the show.
Hey, man, I'm doing great. Thanks for having me.
Absolutely. So I heard about you guys for a couple of years now. You guys have a very popular podcast. I think it's called the Creative Real Estate Podcast that you do with AAA. So that's why I started hearing more about you guys. You guys interviewing a lot of big players and industry leaders and putting out tons of content, doing like a lot of meetup groups. That's why I started kind of hearing more about you guys. But for people that's not too familiar with your background, would you mind giving us a little bit of insight of your story and how you became going into real estate?
Yeah, sure, man. It all started back in 2013 and in my prior life where I wasn't in real estate. I was actually a probation officer. And it just started, you're an adult, you want to buy your first house. So I was like, all right, I want to buy my first house. I'm 25 years old, and I'm still doing the kind of the party thing a little bit. So, I was telling my friends, it's like, hey, I'll buy a house. We don't have to live downtown and spend this expensive rent anymore, and you guys can come live with me. So, that's kind of how it started, and the light bulb went on as you can realize that they were paying the mortgage, essentially, with me renting out the bedrooms. And so from there, I just really got hooked onto real estate. I started reading the Rich Dad, Poor Dad books, and like I said, started listening to podcasts, those type of things, and started growing my rental portfolio from there. So I started out with a house hack. You buy a house and then you refinance it, go get another one. So that's kind of how it started. I moved into real estate full-time in 2016. So I quit my probation gig and just moved full on into real estate at that point. Went ahead and got my license. And one of the main reasons why, and I hope this never happens to anybody, but I had been with my girlfriend and we're still together. Well, we had probably been together for about 3 years, and she was involved in a serious car accident. So as you can imagine, you're involved in a serious car accident. What happens to you when you can't work and you don't have that paycheck that's coming in every 2 weeks or whatnot? And so luckily I had already started passive income through single family, and I basically just was like, you know what, I need to do something more, and that's what made me jump into real estate. And I've been a heavy advocate for passive income since then. So just to let everyone know, that is definitely a why. And I that is something that I think everyone should think about when it comes to passive income is, how far does your last paycheck make you, So.
Yeah, absolutely. And that's, sorry to hear that. And I'm assuming everything is, working out and doing a lot better.
Yep. Things have gotten much better. It was pretty serious, but like I said, she's progressed and she's doing pretty well now. And but like I said, that was definitely my why, and it definitely gave me the goal to just say, hey, I needed another way to provide for us. So
Absolutely. Yeah. Yeah. I have a lot of friends that actually are parole officers here in Connecticut. And, a couple of friends are, working, the corporate 9 to 5. And, I've been doing this for, almost 10 years. And then I always had that aha moment. It seemed like you, where you kind of, stumbled on a book. Was there like a particular, like one day is like, this is what I got to do. And like, what is that thing that kind of helped you put you over the edge?
Yeah, it didn't take me very long. I read the Rich Dad Poor Dad book, and then he has a couple other volumes. I think it was Rich Dad Poor Dad Cash Flow Quadrant, and I was just reading that, and he has the 4 quadrants: the E, the S, the I, and the B, and it dawned on me then. I was like, you know what? I need to be dictating my own income, and I need to be buying assets to help me out, and so. That was my aha moment. That was my big aha moment. And so I made sure to set myself up a little bit, had some reserves. So I stayed at my job until I had enough reserves to get this new business rolling. And once I did that, that was it. It was take the bull by the horns and go real estate full time. And that was, my choice at that moment. So.
Absolutely. Were you doing any type of stuff? You just what you was kind of describing for the single house was kind of like the Burr model. Was there any other type of creative real estate?
Pretty much. And it was just accumulating rentals. And so basically we started there. I eventually met my partner in 2016, my business partner, Adam Adams, who you were talking about, that does the creative real estate podcast show for us. And we started fixing, flipping houses, wholesaling houses. So that was what we were mainly doing in 2016 and 2017. What brought us on to multifamily is we went ahead and purchased our first one together. It was a 5-plex. So small 5-plex unit. We put 20% down, and we ended up getting the seller to carry the rest of the balance.
Nice.
So that was another quick aha moment where we had only done single family, and now we had this 5-plex, and it was more doors under one roof, and we noticed it was taking the same time to manage that property as it was to just do a single family.
Exactly.
So that was our one aha moment, and from there, I want to say about 5 to 6 months later, we were already getting education. And we were diving full on board to getting our multifamily business set up.
As far as like the transition to like the 5-plex over to like, larger deals that you're working on now, what type of education did you get? Did you get like a mentor, or just kind of like trial and error, or kind of work with another syndicator to get in that transition?
We did do some education. So we did the Dave Lindahl as RE mentor. So we did that in June of 17. And so we've been at it for, coming up on 2 years almost. So, but yeah, we started in June of 2017, did the education, ended up hiring a coach, just to make sure that we were doing the things necessary to get this business progressing. So we started there, and we just started making offers, man. That was really where it started. Started making offers, and sure, I think we made some mistakes on the way, but that's kind of really the only way you learn. It's one of those fail upwards, and my partner always uses that, Adam. Just fail upward, and I've taken that mindset, and just be as educated as possible, and just go at it. So.
Absolutely. So you and Adam or do you have like kind of split roles, or are you kind of doing like things together, or like, so what's kind of like your role within the team?
Yeah, and we also have another partner on the team, DJ, and then we have a few other team members. We have our underwriter, we have our social media guy / marketer. So he does a lot of things like more trying to raise money. He sets up our ClickFunnels. He sets up our automation, those type of things. So everyone has a huge role, and it's very important. If you hear Adam, he's doing the podcast. He's kind of the face of BlueSpruce Holdings. He's out there. He's networking. He's our educator. So, he does the podcast, and so you guys can hear some good tips from people from across the country, top speakers, talk about multifamily and honestly different types of investments. So he runs our education portion. And then as far as me, I handle the acquisitions, the market research, and I'm basically the transaction coordinator for the company. So going from LOI to closing date, I handle everything that needs to happen during that time period.
Wow. Yeah. So you guys is pretty much like the same blue. Every time I talk to other successful investors, they kind of take that same process of they're curious about it. They get educated. They get a mentor. They start taking action, and you guys like just kind of ramped it up like extremely quickly. And it's great that you have a good friend, and a good team to work together to kind of even ramp it up even more, and even have your real estate license where you're now able to access more deals or do additional stuff and even add additional layers onto the business is pretty impressive.
No, I appreciate that, man. Absolutely. I highly recommend, if you're going to do syndications, build a team, because there's going to be things that you're not necessarily good at or you don't like to do, and you need somebody that has that passion and that understand or has that one thing as their strength, and you guys just build on it and just make the company bigger and better.
Absolutely. So as the deals that you're investing, are you kind of focusing more on the Denver market, or are you guys looking in different states?
So we're based in Denver, and we wouldn't turn down anything in Denver. It's pretty pricey here in the Metro Denver, and even getting a little pricier as you head up north to Fort Collins, Greeley, head down south to Colorado Springs. But we do look in our backyard, so that is a target area. I would say we're putting most of our eggs in one basket in Oklahoma City, and even Tulsa. Tulsa's not too far away, and it's a pretty good metropolitan. So,
what do you like about those markets, and what are kind of the indicators you guys are looking for to invest in that market?
So where I see in Denver, and I think Denver's great market, great fundamentals. So like I said, if I find one here, it's going to be great. Where Denver feels peaked, I feel like Oklahoma City's coming up. So we see that there's a lot more that can be had as far as what's coming in. They have a lot of good jobs that are there. They have the Amazons, distribution center like in Tulsa. In Oklahoma City, it's highly diverse. It's not basically predicated on oil and gas anymore, even though it is the big economical driver. We do see a lot of energy that's done there, a lot of healthcare, education, government. So it's a lot more diverse than it has been in just the recent past. So it's one of those areas, both Oklahoma and Tulsa, that are, I feel, on the way up. So.
Absolutely. So are the deals that are outside of your marketplace, are you guys like partner up with other sponsors, or are you guys just like doing all the deals yourself and then raising the investors and doing the syndications that way?
We're pretty open to either or. So we look to find and source our own deals and raise the money. We are open to other people raising money with us as well. So I like to, again, think of this as like a team sport. I think if we can all do something great together, we'll all get to the finish line and everyone can have a slice of pie, So
Absolutely.
We help other syndicators that want either experience or help raising money. So again, that's another way to get into a syndication without finding a deal. So.
Absolutely. For your local deals, are you guys like doing self-management, or are you still going to third-party management and kind of overseeing the management?
Yeah, everything is third party right now. I would say the big picture would be to, sorry about that. I would say the big picture would be to eventually have our own property management company once we feel we've expanded enough, because I believe you can also mitigate some of the expenses, because you're paying a property manager, 4% here, this property manager 4%, where if you had your own umbrella, you could probably help your operations a little bit better.
Yeah, go right to the bottom line and stuff like that, and give better returns.
Absolutely.
Are you're kind of like what's your kind of your target acquisition criteria? What type of deals are you guys looking for?
Sure. So we're looking for deals, ideally 100 units and above. Minimum would be 50, but 100 units and above. And we're looking at assets in the B and C class. Same in the areas would be like A, B, and C areas. And what I tell people, it's like, if you find me a B property, or like a broker, if I find me a B property, it needs to be in an A area or B area. I don't want it to be in a C class area if it's a B property. So C class, then we can go to C area, but otherwise it's either alongside with it or better. So we look at those things. And then I would tell you value add. I don't mind value add. I don't like extreme value add. I like the property to be on its own 2 feet. So something that's losing money every month. If I'm holding that property, I better turn it quickly, and I better have the right property management in place, because I just find it, if you don't have those things going, it's a very risky proposition, especially if you're raising money through other investors. I think the last thing you want to do in this business is lose money. So
absolutely. So you guys looking for maybe a couple year turnaround and sell it, or more your investors more interested in like a long-term type of hold strategy?
So it's going to be case by case, depending on where the property's at or what the stage is in. Typically, what we have been doing is looking to hold for 5 years. Some of the ones that we're looking at now is we're gunning for more like 7 to 10. Just based, just kind of forecasting what we believe is happening and where we would a good place to sell. So, and also a good place for our investors to get their returns. So we're starting to look at more longer term holds.
Absolutely. You said that you guys want to kind of stay away from major rehabs and stuff. So you're kind of looking more managerial changes, maybe turn around a couple units, increase the rents, or is any other strategies that you guys look to implement?
And I guess by mainly distressed, like if there's a property that's 100%, vacant, well then, yeah, I don't want to jump on something like that. But I mean, if we have to rehab all the properties, put some money, we're not scared about anything like that, or scared of structural or roofs, nothing like that. But we just like the property being on its own 2 feet.
Absolutely.
So if we can see that there's going to be good returns with doing, if by renovating every unit, if that's what it needed, and we can verify it through comps and lean more on our brokers and property managers. If we see that there's a return, then we'll underwrite it as such, and that doesn't scare us. But yeah, I guess what I meant by the extreme value add is something that's just torn to shreds, and you're going to be losing money in the recent STAR. That's something I'm really not interested in.
Yeah, that makes sense. What's your guys' process on when you find a deal, like it looks good on paper, you go out to take a look at it? Are you, bringing a local contractor, roofer, like who kind of you bring on site with you to kind of examine your numbers so you can kind of really underwrite it properly?
Sure. So when we first underwrite a property, we basically take anything that the seller's giving us. So based off their financials, based off some pictures and rent comps that I can see and whatever they've provided, I let them know, hey, look, I can pay this amount with everything that you've provided. And so if they accept my LOI, now I have more, kind of like skin in the game. I'm like, all right, now I'm going to go verify every single thing. I need to go down there. Yes, I'll bring an electrician, a roofer, contractor. I even bring structural engineer just in case there's some structure issues. What's it going to cost to put in some piers or anything like that? So we basically bring a team and we go and we'll check the outside of the structure, a few, handful of units while it's just under an LOI, which is a letter of intent to somebody that doesn't know that. And then once everything looks good and we're good to go, then we'll put it under contract, and then the real due diligence will start, where I will check out every single unit. So basically inspecting every unit, rechecking all the, the roof stuff, the main mechanical stuff. So that's mainly what we do. And it's, We check the leases. I mean, we go all in.
For like the kind of the deals that you've done in the past, like what are kind of some of the terms you've been setting at, just trying to set the question for new syndicators coming in where you kind of, doing your contracts or your LOIs to kind of, give some type of expectation?
As far as, what do you mean as far as our terms as?
Yeah, you guys are doing like a 60-day due diligence period and like a 30-day close and stuff like that to kind of give you enough time to do it, and if there's any like renegotiation that comes, between that time.
Yeah, absolutely. So I would tell you once we go under contract, we put in a 30-day due diligence, and I pretty much make that non-negotiable. So you'll get some people that'll try to test you and say, hey, how about a 2-week or how about 21 days? And my comeback is, hey, I'm looking at 200 units.
Exactly,
I need to make sure everything is good. I need 30 full days. And that's not something that's, too much to ask in my opinion. So you may get it from some people, and from what I've experienced, the people that are trying to get you in 14, 21 days, be wary of it, because I've seen a couple of times where they've actually not wanted to sell. And I've had that happen to me already a couple of times this year. So I just say, hey, this is a due diligence I need, 30 days. That's fine. So,
I see that all the time. That's why I was kind of asking, because I see that all the time, especially from the deals that we've been involved in where the sellers say, oh, you need 14 days. I'm like, well, you can't do anything in that time period. You got to like schedule to go down to the site, and then sometimes the sellers not give you all the information on time. And so it's like this lap. So it's definitely a key indicator that they're either not serious or, they're, kind of playing some type of games or something like that.
Yeah, we're trying to hide something. And so just that's been my experience, and maybe others have different experiences, and hopefully they have better experience than I've had with that. But anyone that's trying to shorten my timelines, I just find it as kind of a joke. That's just me, though.
Absolutely.
What was I going to say? And what I like to put in my contract is the 30-day due diligence doesn't start until I get the entire financial package.
Absolutely.
So there's a certain list of things that I request, and once I've received every single one of those items, then we start the clock. So
Absolutely.
Give you a little extra time.
Absolutely. As far as investing outside of your local marketplace, is there any tools or research sites or something that you guys use to kind of help make that job a little bit easier, so you can kind of know exactly, you can verify information, and what other tips you can offer us?
Yeah, sure. I always like to start in a bird's eye view. So part of the mentoring package that I purchased with RE Mentor, they have this program called RE Indicator, and they always update basically the grade of what the area is. So if it's an A area, B area, C area, so on. And so that's just one indicator. I don't take it for everything it's worth, but I start there. And then I start working. There's a website called niche.com that I really like. It usually breaks everything down, not just from cities, but zip codes, other sub-markets. And so you can really dive deep and just get a quick sense of what the area is like. I then start moving farther down. So once I take that information, I'll go to your neighborhood scout or Rent-A-Meter as well, just to check the comps. Just like I said, you're just trying to get a feel for what the area is like, and then just start going deeper and deeper to the point where you're getting maybe a CoStar report. So if you know somebody that has CoStar, I try to, be in really good agreements with them, and hopefully we're doing deals together. So it's like, hey, if you can get a CoStar report, great. If not, Marcus and Millichap has some really good reports. I would talk to brokers and property managers and pick their brains about the areas that you want to be in. So like I said, starting from a bird's eye view, I just go down, I talk to people. I like to talk to investors that are investing there, just to get a good sense.
Absolutely. As far as like finding deals, I mean, of course, the brokers and stuff like that. Is there anything that you're doing as far as like connecting with the sellers in any specific ways that you guys rely on, or are you just doing a whole bunch of different stuff?
Currently, what we've been very consistent at is brokers, property managers, and just starting relationships. What we will be doing this year, and probably in the really near future, is we're looking at a few different programs to start doing some off-market campaigns. So a lot more direct to seller, which I think we're going to find more, better deals that way as well.
Oh, yeah.
But what we've been doing has been broker relationships, wholesaler relationships, just really building those. One thing I do like to use, I like to use LinkedIn a lot. So I find LinkedIn very helpful to find and interview brokers that that are going to be helpful to you. So when it comes to brokers, I actually like to talk to brokers that are investing themselves. That's just one of my criteria. Is it's like I want to know that you understand what I'm talking about and the needs that I have for me and my investors. So I do like to talk to brokers or anybody that is investing themselves.
That's a good tip. Yeah, I do the same exact thing. It's like talking investor to investor. They can like say, this is probably exactly what you're looking for. They can, facilitate the stuff a lot faster and just kind of help you along. So it's good getting those key relationships there. So.
Absolutely. So that's mainly how we source the deals right now, and we're getting some good a lot of good deal flow. And I'll tell you the one other tip that I learned, and I think this has even helped more, is I would say last year I had like 8 or 9 different markets I wanted to be in. I wanted to be in Texas and Florida and Georgia and North Carolina, South Carolina. I found them all to be very good markets. Nashville, Tennessee, I found it to be great markets. The only problem is trying to do your market research in all those areas, but even notifying all the brokers. They're just, once you tell them this is exactly where I want to be, and this is kind of where we're at, we're more of a laser focus, like, hey, I only buy in Oklahoma City and Tulsa. Now I have brokers that are like, wow, I need to get them those deals because I know exactly what they need. So to tell you the truth, my deal flow just by limiting my markets has actually probably increased almost double.
Yeah, I can imagine. And just like in specific neighborhoods and stuff, like you get to kind of know things a lot better. The brokers know that, be able to send you exactly what you need. And you're right, getting to the next step of underwriting it and see if it's a good deal and checking out, instead of kind of being all over the place and probably not getting much done from there.
Yeah, and like I said, we closed deals. It was good. It was a good year, but I just feel like being laser focused, we're just going to be that more competitive, and we're going to understand what we really can do in that market. And so I'm very excited for 2019 and moving forward. So
absolutely. So you are you also involved in the underwriting as well? Or you have someone specifically on your team that's kind of handling that?
We do have an underwriter on the team. I mainly do some screening for him, so I make sure that all the details that we need in order to be underwritten that we have. So I make sure to actually I actually train the brokers or wholesalers or anybody that wants to give me any deals. I basically have a criteria list, and I just say, hey, I need all these items. Don't send it to me unless it's all there, because I have deals coming across the desk every day, and I just want to make sure that if the deal comes to me, I have the time and I have everything. That way I can put the time and effort to get the deal and make a viable offer. So
absolutely. Are you guys targeting like specific ages of probably know, of course, if they did some rehab, over the years to kind of make it, pretty good, decent deal. Are you guys looking specifically like that, or just kind of more broader? You can kind of give us a little insight of what your specific criteria is.
Yeah, I'm pretty broad with it. I mean, anything 1960s and newer, so those would be your C, your C properties, your B properties. Not going after any A's right now, but yeah, your C's and B's. So I'm fine with that. We're fine with some, lower vacancies, things like that. I would say what I have found, anything below 60% is a property that's probably not standing on its own 2 feet. And that's one of our criteria is, hey, at least be able to pay the mortgage, and I can move it from there. And so, I'm not saying you can't make money if you bought underneath that. I'm sure there's tons of people that are buying vacant units or, things like that, and they're making a killing. But that's just not what we're doing at this time.
Very cool. As far as you just strictly focus on multifamily, you guys looking at other stuff like self-storage or mobile home parks, which is pretty popular. Are you guys also looking at those as well?
Right now, it's mainly just multifamily. We would consider mixed use, but right now it's, like I said, just strictly multifamily. We're just laser focused. This is our bread and butter, and we just want to be the best at it. For anyone that is looking at checking out other types of, different types of assets, such as, office, retail, commercial, and industrial, there's a website called IRR.com, and that's all they do is market research on a lot of these areas. So, anyone that is interested, and even for multifamily, they do the same, but they'll get you a lot of data that you wouldn't even think of. So anybody that's that wants to really take data dump, look at that website and become a member, and you'll get some good stuff.
Wow, yeah, that's great. Yeah, I haven't heard of that site. I'm going to check it out and make sure to put it into the call notes and let everybody know about that site. As far as like the putting everything together, you guys found the deal, and now the investor piece. Is there any specific strategies that you guys are seeing that are successful that's bringing in investors and kind of getting more involvement for your deals?
Sure. So what I always say is you're always raising money, whether you have a deal or not. You're always out there networking, whether you have a deal or not. So we have meetups that are going. They used to be a few times a week. It's now once a week. We do them in different locations, but that's how we've been able to get networking and investors that way. We attend other networking events and things through the podcast and YouTube, and just putting yourself out there and just letting everybody know this is what you're doing. That's been a huge attraction. So social media, letting people know, hey, this is what I'm doing. If you follow any of my other partners, they're probably posting something about apartments every single day. So, some people might get sick of it, and others are really going to be attracted to it and going to want you to tell them every single thing about multifamily or every single thing about retail or single family, whatever it is. You just have to live this life every single day and with a smile on your face. And honestly, it's fun. So it's pretty easy to do.
Absolutely. Yeah. Like you're right. You got to put something every day, and it's just, people want to hear information. It is if they're really interested in it, they're going to, tune in all the time when you're posting stuff. So that's really good. So tell us about you guys doing some like larger events, like a couple times a year as well. Is that in Denver as well?
Yeah, these ones have been in Denver. We might expand at some point in time to other cities. And this has actually been a very big help too. Just it's just another type of education, letting people know, hey, this is what multifamily is, or this is what single family is. What we just finished up one called Finding Deals Summit earlier this month. So we had about 16 speakers speak about how they find deals. Wow. And we had a few hundred people there. It was great. It was a lot of networking, honestly, a lot of stuff that even I learned, and I was a host, and I was hosting the event. It was good. We have another one that's coming up. It'll be in October 3rd, 4th, and 5th here in Denver. It's called the Raising Money Summit. So this was a big hit last year. So this will be the second annual of this event. And we'll probably have somewhere in the ballpark of, 12 to 16 speakers again, basically sharing their tips and tricks on how to raise money. So Any syndicators that are, trying to tweak their business, or you're new to the game, I think it'll be a good event to come to.
Absolutely. I was telling my partner when I first heard about it, I wanted to go to the meeting, but I'll be on vacation. But Yeah, definitely going to put that on a schedule for the next time it goes around. It sounds like it's a great time. Like you said, you're learning a lot of new stuff, meeting like really good people that could be potential investors and partners, and just overall networking is just great thing to do.
Oh, yeah, absolutely. Actually, us hosting one of these events, it was the Raising Money Summit last year. We invited a speaker to come out. His name is Corey Boatwright. He is an investor in Oklahoma City.
Mm.
And little did we know, this is something that we wanted to do. We ended up finding a partner that is going to help us a lot in Oklahoma City.
Wow.
So now he's our boots on the ground. He's a big market research guy, and he really understands every area around in that market. So he now became a big time beneficial partner with us, and like I said, in Oklahoma City also. So you never know who you're going to meet at these things, and what knowledge you're gonna gain as well. So
absolutely, yeah, I think that's the one of the biggest dividers of the the not so successful and the really successful is like getting out there, investing in yourself, and meeting new people, building on your team, and then eventually, like you had said, just meeting someone that can take your business to the next level. Like that's just awesome.
No, man, I appreciate it, and yeah, I highly recommend for anybody, not just this event, but just go network.
Absolutely. So like I know you guys done from the finding deals and doing it all the way to the closing. Was there stuff that you wish that went smoother, or if you can do it all over again, that they can give us like some tips as far as kind of closing that gap and stuff that you learned along the way?
Sure. You know what? I think you learn something every time. It's crazy. Even on our latest raise, we're learning, hey, we need to get webinars out much sooner than we did on this one. So I think it's just like getting a timeline of what needs to happen, and just trying to become as efficient as you can be.
Mm-hmm.
So just like I said, over time, I now know, all 30 days of your inspection period are a valuable 30 days. So, it's like, all right, once we got it under contract, I need to book my flight out there. We need to get X, Y, and Z going. And so I've just found to actually have a timeline and a checklist of things that need to be done, and you just adhere to those and tweak it as you go. I wish I could kind of tell you something that I've kind of learned as of late, but yeah, the only one as of late was, I think, raising money. We should have probably gotten the webinars out a little sooner, and our raise was it got a little tight to the end. So,
well, that's important. I mean, you gotta, you have a specific timeline on your contract, and you're like trying to get all the money set up, and then get it all ready for closing. So, it's you have to meet all these expectations. There's so much moving pieces, and it's like everything kind of like got to work together. Not like it seems like things just fall apart, when you don't need it. So that's definitely a really good tip there.
Yeah, I would tell you, build a system that's going to help you out. That's my one tip. Build a system, and you know what? Don't worry about if something goes wrong. You'll just remember, you'll fix it then, but you'll remember for the next time, and then just make those notes and say, okay, now I need to allow myself this extra day for that, or don't forget this. So that's what I would say, is build a system of exactly what it's going to look like from 0 to 60 days or however long your close period is. Mm-hmm. But build a system of what that looks like, and then just go for it. And just know that failure is not an option. So you'll get it done.
Absolutely.
That's all I'll say.
Absolutely. As far as like, I know that you said that doing this business is a lot of fun. What about work-life balance? What are you kind of doing when you're like not in the office?
When I'm not in the office, I'm a big sports guy, so we're sporting my Nuggets tonight. Other than that, man, friends and family, like to do a lot of game nights, things like that. I'm a big family guy, so tell you the truth, I don't work Sundays.
That's
right?
Good. That's
the way it is. And if you can input that in your life, or whatever is the most important. But for me, it's family days, friends day on Sunday, and I shut everything out. So
that's good. What about like, say, your morning routine? What time you getting up, and what's kind of like your daily schedule looks like? Sure.
So I get up about 5 a.m. every morning, and I hit the emails. As you're aware, emails can kind of they're one of those things that can cause disruptions in your day.
It's like a double-edged sword. Yeah.
Yeah. This is important. Well, I'm sure it is, but you're disrupting me from actual money-making thing that I'm supposed to do. So what I like to do is probably for the first hour and a half, I go through all my emails from like 5 to 6:30. From there, it's get a good breakfast, do some exercise, and play with the dogs for a little bit. I got 2 golden retrievers.
Nice.
So from there, I pop in the office at about 9:30, and then I'm with my team, and then we're as far as doing acquisitions, I am then prospecting. So I'm calling my brokers, I'm emailing the property managers, or I'm following up on my current deals. So I'm always prospecting, and I do that for a few hours a day, every day.
Wow.
So I do that, and then from there, it's basically what else does the team really need, and I assist in any way I can.
Absolutely.
And so that's kind of the remainder of my day. Towards the end of the day, I'll finish up any emails that are maybe late coming in, and then by 5 o'clock, I shut it down. So I think you do have to have a balance in your life. I know when you first start a business, you're going to be putting some hours in. I get it. You got to do some sacrifices, but try to get yourself at some point to a level of comfort and a level of not neglecting the people at home, that love you and that support you in all this. So I try my best every day to start from 5 to 5. So I work so I do work like 12 hours, I guess. So.
Well, if you're efficient, you're getting a lot done. It's like it's a lot of time, so you actually can get a lot done in that time frame. So that's pretty good.
Oh, I appreciate it, man. Yeah, so that's really a typical day. Things come about sometimes. Like I said, the guys need help with something, or I need them to help me with things. So it's just that's just kind of what it looks like. But all I know is for my role, I prospect every day. That is the lifeline of the business. That's where my role makes the money. So that's where I dedicate myself on doing.
So I know you're learning a lot of actually in the trenches, doing it every single day, and then you're learning from the podcasting and doing other stuff. Is there any books that you can recommend, or like a book that you read lately besides from like Think and Grow Rich that you can recommend that we check out?
Yeah, The One Thing was by Gary Keller. If you ever read that book, it's about the one thing that you need to do every single day, or implement that in your business. What's the one thing that has to be done? I believe that I like that book. I like The Compound Effect by Darren Hardy. That's a really good book, and that'll really get you started with your mindset shift, those type of things. So I would start with those 2 books.
Cool. As far as I know that you have 2 golden retrievers, a girlfriend and some family. Is there anything else that you're grateful for?
That I'm grateful for. My team couldn't do all the syndications without them. They work hard, and I'm very grateful for them. So very grateful for them, friends, family, health, and just looking to prosper in the business this coming year. So.
Absolutely. Yeah, my biggest takeaway from just talking, you just keep mentioning your team and the importance of that. I think that's really key. Is this? I have a kind of like a small team myself, and we're really organized. We have like certain roles and stuff like that. But for me, doing it all by myself, it's just impossible. Or you just be, like you said, you won't be able to have that work-life balance that you need to keep yourself mentally strong and be able to, get stuff done. So I think that's key. And you guys are just doing it great. And as far as the cohesion, and everyone has their own role, and then just getting stuff done and doing productive stuff.
Yeah, no, absolutely. I think it's essential. Sure, I could probably, I don't know how many deals I'd do, or if I'd lose all my hair if it was by myself and I try to do all these roles. I don't know what I would do. I'd probably have to work 20 hours a day, and I would never sleep and I don't know. So like when you said, who am I grateful for? I'm grateful for my team. They, like I said, we all have our roles, and we maximize them and do them to the best of our ability. And I think of syndications and multifamily, again, as a team sport. I'd rather have a slice of 100 pies than one slice of, or then 100% of one pie, I guess. That's just my, my mindset on that.
Yeah, you're totally spot on with that. And like I said, it's just a really great spot to speak with you. I love speaking with other fellow investors and seeing what you're doing in your business. And I just love it because I'm able to just take little nuggets and implement it in my business and help others. And we're out here spreading this information so we can help other investors as well. So how do we get in contact with you? People in your market, people want to, do business with you. What's your contact information?
Yeah. You can go to our website, realbluespruce.com. You can email me directly. That is Manny@realbluespruce.com. So that's Manny, Manny. And that'll be the easiest way to get a hold of me. If you go to my website, realbluespruce.com, you'll be able to, catch me on Facebook or LinkedIn, and you can follow me there. I'm also on Twitter. You can follow me on Twitter as well. So, just go to the website, and then, please feel free to contact me if anyone has any questions or wants to, possibly partner on some deals. I'm very open. I'm very open with all those things. So,
Awesome.
please contact me.
Yeah, I really appreciate it. Thank you so much for taking the time out of your busy schedule to speak with us. We got a lot of good nuggets from the call, and I look forward to connect with you in the future and then possibly seeing you at one of your upcoming events that you guys do each year.
Yeah, man. Let me know when you come to Denver. We'll meet up. We'll grab some lunch, and if we come to the Raising Money Summit, that'd be great, man.
Yeah, definitely. If not, I'm gonna be coming there during the playoff season, so I can go check a game with you.
Yeah, hopefully the Broncos make the playoffs this year, man.
Yeah, right.
We'll see. But yeah, that sounds great.
All right, sounds good. All right, thanks, brother Manny. I really appreciate it. Look forward to connecting with you soon. Again, Manny for Bruce, Real BlueSpruce. Please check him out, and we'll be talking to you soon.
All right, thank you.
All right, take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.